Hello traders, welcome to your economic calendar update for Tuesday the 17th of February, and we've had a quiet night last night as expected. However, we've woken up this morning to the RBA minutes and we've started to see the market kick into gear for the week. And this week we should see a little bit more price action. Now, we'll get into the RBA news. They put out their statement associated with the most recent rate cut last month. So what's happened is that the market has actually bounced and the price action's seen a rally, and that's due to the RBA statement coming out saying that they were in two minds as to cut in February or March, and that sent the market into questioning about whether their previous thoughts of, well, we will get a rate cut in March as well because the Australian data justifies it, to, well, hang on, were they thinking of cutting in either February or March, and they just chose the sooner rather than later to be a little bit proactive. So we've seen the Australian dollar take a bounce, and that could continue now until we see, so there could be support under the double bottom, which I'll talk about in the technical video, on the Australian dollar now that the market is having doubts about a rate cut. And that will only change should we start to see some really poor data kick back into the Australian economy. The ANZ, the Westpac Bank and the Commonwealth Bank have also come out and said that their analysts maintain the stance that they believe that there will be a cut in March. And the NAB have now cut back and said that there's a 50-50 chance. We'll keep an eye on what the major banks believe. However, the market isn't of the same view. And they were starting to price in last week an additional rate cut in March, but now they're not so sure and correcting that price action. The Australian dollar also needs to be lower, according to the RBA, and that's great for them to say, but only policy is going to push it lower now because it's had such significant falls. They also noted, which they've noted before, they do have concerns over the property situation in Australia. With low interest rates at extreme lows and potentially Australia and the UK looking at raising rates while we're still cutting, could send property prices up 15%. And that could form a bubble situation for the Australian housing market where local investors and local property owners, which is a very large percentage of household portfolios, is their own home, could actually reach unaffordable levels, and that can create a housing bubble. So if prices do rise by a significant amount due to the very low interest rates, we could see some turmoil in that area. So they did note that. And also, for them to be noting that and putting extreme impact and words of such significance in their statement means that they are starting to get concerned a little bit more than just putting a note in every single statement of the last few months. And that could also mean that that's weighing on their mind about holding back on cutting rates even further because they are very fearful of a property bubble in Australia, which would have catastrophic events. Similar to what happened in America, because Australians are very highly leveraged towards the property market, and they are highly leveraged in debt as well towards property. Now, that's enough of the RBA, and I'll talk about technical aspects of that in the technical video. The euro, we've seen a bridging loan fall through. So that means that the euro and Greek will now meet again on Wednesday and see if they can come up with a deal. They have 14 weeks left of cash, and if they don't come up with a deal within the 14 weeks, Greece runs out of money and there would be what we're calling a Grexit, a Greek exit of the Eurozone. So with the deal falling through, the euro came off overnight, and that's just purely due to the increased risk of a Grexit, and this is definitely going to weigh on the euro for as long as there isn't a deal produced. How low it goes will depend on the words and the headline. So we're still a headline-driven market as associated with the euro, but for now it doesn't look strong at all. Now, so Wednesday's the next meeting, and until then, it's just going to be people coming out in the press. Let's have a look at the calendar, and what we've got coming out is UK data. The pound is quite strong at the moment with good reason because their economy. So we're looking for evidence in 4 hours' time that the UK economy is going from strength to strength. So their CPI and their core outputs and retail are all going from strength to strength, and that will support the pound and present possibly a trading opportunity, which I will talk about in the technical video. So keep an eye on that data. That's what the market will be looking at, and then they'll also be keeping an eye on some of the data out of Europe. We have coming out some US data, but nothing of great substance that the market is really focused on. But we do have the SMB Chairman Jordan's speech. Now, that's pretty critical. The market will be looking for signs of intervention. What have the Swiss been up to since pulling the peg to the euro? And that could affect the euro price tonight as well. So that speech in many hours' time could play a little bit on the market and could affect the euro. So just keep that in mind. But other than that, we don't have a lot besides the UK data and a little bit of euro data. Wednesday, coming up, we've also got some more UK data. So I'll talk more about that tomorrow, but we don't have anything between now and then. So I will be back prior to any major announcements tomorrow. So that's it for the economic data coming out tonight. Make sure you tune into the technical video, and hopefully we can come up with some trades. Really, tonight is the first trading night of the week, and hopefully we can pick up a few pips this week. Although I do believe it will be a relatively quiet week, and we won't be picking up hundreds of pips or seeing any major long trends, but we'll wait and see. So until tomorrow, trade well.